now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show where we think, act, and prosper. And today we're joined back with the expert himself, Rick Rule. How you doing today?
I'm fine, Daryl. The better be for being on with you. Thank you for having me back.
Yeah, so I think it'll be fair to give the audience an update. We did an interview a couple of years ago when we jumped into the Russian equity trade, and we lost. Well, I mean, I know some people that lost some significant amount of money in that. We have Donald Trump coming in saying that he's going to negotiate a ceasefire or something with Russia and Ukraine. So, is there a possibility that we could even that those could come back to, like come back to life?
That's a bigger question than me, Daryl. I mean, I hope the answer to that is yes. Of course, like all other candidates, Trump has said a lot of things. I learned when I was in my teens not to take any candidate's promises seriously, particularly ones that sound attractive to me. They seem to be the least likely to occur. I hope, not just for reasons of my own portfolio, that there is peace in the Ukraine. As I understand it, about 100,000 people have been killed and millions of people have had their lives disrupted. So, separate and apart from my own portfolio, I hope peace comes to the Ukraine. And I suspect that both parties are exhausted. I suspect that both parties are looking for a way to find peace. It may be that Trump is that way. The fact that he says he's going to do it, of course, doesn't give me either hope or fear. I've learned in my life that politicians are lying when their lips are moving. He being no exception. It's interesting that Russia treated me extremely well for 22 years. But when it didn't, boy, it sure didn't with a vengeance. Those stocks, relative to the assets they had, relative to their balance sheet, relative to the cash they produced, and particularly, and not many people notice this, particularly relevant related to the very, very, very high quality of human resources that these companies enjoyed. They were cheap. And then all of a sudden we found out the reason why. It didn't occur to me that the Russians were actually going to invade Ukraine. It didn't occur to me either that the West was going to participate to the extent in the Ukrainian elections that they did. It didn't occur to me that the West was going to violate the promises they made to Russia about not moving NATO's borders east. I always underestimate the venality of politicians. And that was another case. In answer to your question, I suspect that the Russians would welcome foreign investment back if peace occurs in the Ukraine on a negotiated basis. And I would love to return. The country was extraordinarily good to me. Going all the way back to my first foray in Russia with the Lundin family, Vostok Nafta, which was a legitimate hundredbagger. Going back to Gazprom, I mean, I have wonderful, wonderful memories of meeting very high quality people and making a lot of money, enjoying a lot of dividends. Of course, it went along swimmingly until it didn't, and then it didn't in spades.
Yeah, yeah. Yeah, it's interesting, just even looking at, being a capitalist and, how these geopolitics can interfere with markets to where investors are impacted by how we invest and try to participate in markets. And this event, like I think it triggered a lot of things for commodities in general. I mean, obviously the weaponization of the dollar and that contributed to more central bank buying of gold. So that's one aspect from this particular war in Ukraine and Russia. And then you also had a huge supplier of commodities in the market, Russia, uh, being and now you have countries that are trying to like onshore more production, trying to invest in their own I guess, infrastructure to produce commodities and such, because we're seeing like the reality of, I mean, I think it's what, 40% of enriched uranium come out of Russia. And then you have the whole natural gas dynamic with the pipelines and such. And so like there's like was huge implications for this event and the response to the event. And so I'm kind of wondering what is your take, what is your global outlook on commodities, considering all of these factors?
I suspect that if peace breaks out, and notice I said if, Daryl, if peace breaks out, that you will see gradual softness in some commodities. It will take a while to restore Russia's productive capacity in natural gas because they haven't invested in sustaining capital. They've needed the money for other things, bombs, bullets, and stuff like that. You won't see an immediate resumption either, I don't think, of their nickel capacity or platinum and palladium capacity for the same reason. But over time, Russia is easily the lowest cost producer in the planet of potash, of platinum and palladium, and of nickel. And I suspect that a return to global markets by Russia in those commodities would challenge incumbent producers if it happens. I think that the other trend that you mentioned, which is the weaponization of the US dollar, is something that you glossed over, but I think your listeners should pay attention to that. Whether you agree with what the Russians did in the Ukraine or not, what the United States government did is they stole $300 billion worth of Russian holdings in US treasuries. This is not something that went unnoticed by other countries that the US government has policy disputes with that are large holders of US treasuries. If you were Brazilian, if you were Saudi, if you were Iranian, not that the Iranians owed US treasuries, but particularly if you were Chinese or Indian, the message was loud and clear. The asset class that used to be the premier asset class on the planet, the Rolls-Royce of savings products, the US Treasury, had a new element of risk introduced. The United States was willing to forego its franchise as the world's reserve currency and the world's most important savings asset to further US policy extraterritorially. Your listeners should divorce themselves a little bit about whether or not they agree with US policy. They need to consider the implications from the point of view of our customers, other countries, as to our right to impose our preferences on them extraterritorially. And that's a real change in the global financial system. I guess the real political winner in this struggle has been the Chinese. We have driven the Russians much more closely to the Chinese. The Chinese have sat back and watched as the United States has spent $7 trillion in a series of foreign adventures, beginning with Iraq, now all the way through, Yemen and Ukraine. While the Chinese have spent their $7 trillion, I'm sorry, I lost 3 zeros there, their $7 trillion automating Chinese manufacturing to, among other things, compete more efficiently with the US. And I think people need to consider that too. One could say that the whole adventure in Ukraine was an enormous inadvertent subsidy by the United States to China.
Hmm. Yeah, yeah, definitely. And speaking of like Eastern Asian countries, so I've been looking at India as an investment opportunity, and I've been looking at some companies out there, and I just want to get your take on what's your long-term outlook on India?
I don't have one, really. I look at the success of the Indian diaspora, the success of Indian people, particularly Gujarati people around the world. Just the way, frankly, 40 years ago, I looked at the success of the Chinese diaspora. And I thought, man, if these people ever became more free at home and they could accomplish at home what they do abroad, that country would take off on steroids. China never became free; it just became more free. And the idea that the place became more free and urbanized kicked off one of the greatest booms in humankind. India, if their internal politics and their internal sociology allowed, could probably do the same thing. But that's a very, very, very big if. There are social strictures in India, in Hinduism, a caste system that suggests that there is an exalted class, the Brahmin, and then there is a caste that a lot of Indian society believes to be subhuman, the untouchables. And this is not a really good way to incent uh, economic performance from the high quality intellects that exist among the untouchables. And there are really amazing social obstacles to India advancing inside India. Modi has done a reasonably good job. Modi being, for those listeners who don't know, the current prime minister of India. But you'll note that he is very close to the BJP, which is really a Hindu nationalist party. That Hindu supremacy in India is challenging to 150 or 160 million people who are Muslim. And it's challenging too to 40 or 50 million people who are Sikh. So I think there's a lot of challenges there. There's a lot of opportunity there. I myself tried to do business in India beginning about 30 years ago. And I found the country so thoroughly corrupt. I mean, you had to pay a bribe to cause a guy to give you the name of the person that you had to pay a bribe to get work done. And my Indian friends, Gujaratis, they basically said to me, a white boy stands no chance in India, like no chance. If we're going to do business for your protection and for ours, we have to do business in Dubai. So I decided that India wasn't a place for this white boy. There's lots of places around the world I could go where people wanted to do business with me. And the Indians seemed really, truly determined to pick my pockets. And make no mistake, they were smart. You know, India, it came under the too tough category for me.
Mhm. Got it. And so when I was thinking about India, I'm thinking about the population. I mean, there's a
Yep.
huge population, the demand for energy. I mean, the same
Yep.
with China, and we got this dynamic with China and Russia, and I think I want to say India is still getting some uh, energy commodities from Russia as well. But
Yep.
um, so yeah, that's what I was kind of thinking about in terms of like, okay, we have a country like here in the United States, we're like, oh, clean energy, in which that narrative may be out the window. Who knows? Under under the current coming
Yeah.
incoming administration. But yeah, so
In that sense, there's a lot of opportunity in India. I mean, the Lundin family is an example. uh, Discovered a very large oil field in Syria and decided for various reasons they didn't want to be there. I think some of it had to do with internal corruption in Syria. And they sold that oil field to the Indians, who were able to play the political game in Syria um, with less complication than a European company might have. So, in terms of developing resource assets on a global basis and selling them to the Indians, the Indians are in the place that the US was in the 50s and 60s, securing their access to global resources, the place that the European community and Japan were in the 70s and 80s, the place that China was from 2000 until today. So the point you make there is, I think, a very good one. Looking at India as a place where people who discover and develop raw materials that will be needed to feed the Indian machine, I think is a very good outcome. My attempts there were somewhat more naive. I looked at India's need for oil and gas, and I looked at the sedimentary basins in India, and I said, well, probably the best place to produce oil and gas that would be sold to India would be in India, and there was no room for me in that game.
Yeah, definitely. So earlier you mentioned potash and Russia, and I know we haven't touched on agriculture in a while. Um, what's your outlook there? I mean, it doesn't. I don't hear about it much in the commodities space and everything. And then, I mean, before I was focused on it a lot, but I haven't really touched back with it in a while.
Uh, what I've learned myself about the agricultural chemical and fertilizer business is I can't predict the cycles very well at all. Uh, but the other thing is I've made a lot of money by buying into names like Nutrien in circumstances like 2008 when they absolutely fall apart, and then hanging on for dear life. I have watched those stocks go up 100%, go down 50%, go up 70%, go down 30%. And if I'd paid attention to the share price as opposed to paying attention to the free cash generation and the dividend, I would have driven myself crazy, Daryl. I have a part of my portfolio involved in agricultural materials and agricultural chemicals, uh, just because I think it's a prudent place to store some money. And if I look at those investments over 30 years, I feel very good about them. If I look at them year to year to year, sometimes I drive myself crazy. And so, listeners to you who are trying to decide about fertilizer business and agricultural chemicals will need to decide if they're ready yet to think in decade-long terms. When you and I first started interviewing, God, I don't know how many years ago it was now, back when I had hair, uh, I remember that I was buying high quality US farmland. I thought that high quality US farmland was too cheap. And I had seen commodity prices, soft commodity prices go up, which should increase farmers' incomes, which should ultimately increase land prices. All that happened. And although I'm not selling that farmland, and I suspect, and by the way, I don't operate it. I have invested with some people who buy farmland, manage it, and lease it out to others. But I suspect the sell decision on that asset class will be up to my estate. I don't think I'm ever going to sell it. If we have a circumstance where it gets cheap again, I'll probably be buying it, but I'll probably never be selling it. Now, when I talk about decisions like that uh, in front of people who talk to me frequently at the Rural Classroom, often, particularly younger people, their eyes glaze over. They are hoping to have investments that pay off in a shorter term time horizon. My suspicion is because they want to acquire wealth to enhance their material lifestyle. I don't worry about that. First of all, I've been there and done that. Uh, so I'm just trying to build wealth over time. So I try to invest in things where time is on my side as opposed to not on my side. But I understand that that point of view isn't common to all of your listeners or all of the people at the Rural Classroom.
Hmm. Yeah, that was something that I've been mentioning recently. I know you've mentioned this to me before, and I was recently reading an article with Warren Buffett talking about whenever he invests, he's looking at a 5-year time horizon. Don't worry about the price, focus on the long term performance of the asset. And so yeah, so that kind of really helped sink in for me because like I've heard it a lot of times, like, oh, have a longer term time horizon, and now I feel like it's sinking in a lot more.
Mr. Buffett said, quote, the ideal holding period is forever. Uh, I've never found a stock that good, sadly. I wish I had. But he makes a couple of good points. He says the first thing is if you have a good company and it's done well and you know it and you believe it's going to continue to do well, why would you sell it? If you sell it, two bad things happen. The first is that you pay tax, and you never get that tax back ever. The second is that you have a chance to do something stupid with smart money. You take it out of a good company and you put it in a bad company. I'll give you another funny statistic, Daryl. I hope this makes your listeners laugh because it makes me laugh. Fidelity Investments, a great big huge mutual fund group, They got millions and millions and millions of investors, and they slice and dice investors to get data, all kind of thing. White folk, black folk, women, Midwestern people, retired people, all this kind of stuff, to decide how to advertise to them, to decide how to serve these markets. And do you know the subsector of American investors that did the best in the Fidelity universe? I'll tell you, it was dead people. It was estates. It was people that didn't trade their accounts and didn't trade the latest fad. When you look at all the subdivisions of people that Fidelity did, the best
Wow.
performing group was dead people. Now, I'm not saying that you ought to die to improve your performance, by the way. I'm just trying to say that if people traded less, if they stopped chasing the latest fad, and they let time be on their side as opposed to time being on their enemy and didn't pay tax, most folks would do a lot better.
Yeah, yeah, agreed. Transition into uranium. I wanted
Yeah.
to talk about uranium. So I wanted to know what is baked in the cake for uranium. So I feel like we got the icing on the cake, and then you got the cake itself. And I know there's the supply deficit and stuff, but I wanted to get from you what's baked in the cake for uranium.
That's a really unique space. What I like is that the hot money, even the hot money that adopted the uranium trade hook, line, and sink, are capitulating. They're leaving. And there's nothing I like to see more in a sector than capitulation. All the sort of online, uranium fans and stuff like that. There's guys that have uranium in their online handle. And I saw one yesterday who said, I'm selling my uranium stocks. That game's over. Uh, I love stuff like that. I don't know what the guy's going to do. Maybe buy Bitcoin at 100,000, or buy Fartcoin or something like that. Anyway, so the first thing is that we're slowly but surely, shaking the hot speculator out of the space, which is really, really, really healthy as far as I'm concerned. Good riddance. Uh, because the industry is getting better and better. It's getting better and better, first of all, because we're coming to realize as a species that we need more electricity of all kinds. Wind, sure, solar, absolutely, but uranium too. There's no other power source that delivers reliable 24/7 power without generating carbon. And those needs have come to light recently. The incredible power consumption of data centers and the profitability of data centers, which allows them to pay 80 or 90% premiums to market rates for reliable power that doesn't generate carbon, has led to, at least in terms of attitude, a sea change in uh, nuclear power in North America, which is wonderful. Meanwhile, the circumstance that I described in your show 5 years ago as the precondition for a rebound in uranium, which is Japanese restarts, is with us. It's not in the future. They're doing it. And the uranium inventory that the Japanese utilities had post Fukushima, which was all held for sale because they weren't using it, has come off the market. It's going to be used to fuel Japanese reactors. Increased demand, reduced supply. Sort of bullish, Then there's the sea change of popular support. I mean, myself, Daryl, 5 years ago, all of the news emanating out of Washington was that guys like me who invested in nuclear were absolute scoundrels, despicable, the scum of the earth, profiteers on Hiroshima, Nagasaki, and 3 Mile Island and Fukushima. Now, in the Inflation Reduction Act, these morons want to subsidize me. I mean, I want from being vilified to being subsidized. I got to tell you, I felt cleaner when I was vilified. But I'm an old man, and I'd prefer to be subsidized than shot now. The biggest change in the uranium space, as far as I'm concerned, is that it's the first commodity that I know of that is going to free itself from the tyranny of the spot market by going into the term market. Uranium producers and uranium consumers are evolving contractual mechanisms where they contract with each other to buy and sell uranium in fixed volumes at fixed or at least reference prices for 10 years, 15 years, or 20 years. And this is critically important because it means that lenders will know what price the material will be sold for to service the loans. You don't know that in any other commodity. You're making a loan to an oil producer. Will that person get $50 a barrel for the oil? Will they get $80 a barrel for the oil? Will they get $100 a barrel for the oil? You just never know. So you make your free cash flow assumptions very conservatively, so you know you're going to get paid back. If a uranium producer signs offtake agreements with investment grade counterparties, Tokyo Electric Power, Southern Company, Duke Power, for 15 years, you know how much you're going to sell, you know how much you're going to get paid. And that really, really, really helps a lot. And I suspect over the next 5 years, as the term market becomes more ubiquitous in the uranium business, that the cost of capital for high quality uranium companies, both equity and debt, will be as low as they are in the best of the other sectors in natural resources. This really changes the game. Is it going to change the game in 2025? Probably not. If you talk to 1,000 uranium speculators, if there's 1,000 of us left, and you ask about the importance of the term market on cost of capital for uranium producers, they sort of go, huh? Uh, well, I bought it because Justin Bieber likes it, or something like that. But that notwithstanding, facts matter more than narrative over time. And the facts around uranium are really, really, really attractive.
Yeah, yeah. So you just made that very clear for me. I mean, the
Was it
spot
the Justin Bieber part? What was it?
no, no, it was the spot and term market, which I know the difference between the two, but you spoke to it just now from a predictability standpoint of like when you are looking at investing in a company and this company has these contracts for 10, 15, 20 years, um, and that predictability of, okay, this uranium is going to come in at this price. This is what they're going to sell it to them for. And then you can actually measure out, okay, how much cash flow or whatnot based on that versus like, the oil market where the price per barrel of oil can be volatile. And one day it's $50, one day it's $80 and such. And so like that's like really helpful in understanding like um the opportunity in this space.
Yeah, absolutely. As you know, Daryl, I've been a lender in the mining space for years and years and years, particularly active for the last 20 years in being part of syndicates that lent money to build mines. And the deal is it's like a construction loan. And afterwards, when the mine's up and operating, uh, the borrower goes to the credit markets, maybe to banks, uh, because the loan's less risky and they raise money to take you out. Um, if that senior lender has a visibility into what the revenue picture looks like for 5 years or 10 years or 15 years or 20 years, what happens functionally is that the cost of capital drops by a third. And in a capital intensive business, I can't tell you how important that is. Even if they come to me as a construction lender, I look at the fact that they have material pre-sold to uh, an investment quality taker. And I know that they're going to get the takeout financing. In other words, I know that if they obtain successful completion, economic completion, that they are going to be able to roll my construction finance over into permanent finance. If I know that that's going to happen, I can be a lot more generous in terms of, in terms of pricing.
Yeah, yeah. So with the supply deficit, so I think we're still what 20, 30 million pounds deficit. I forgot the numbers. I haven't looked at the recent numbers, but we have these reactors being constructed. I mean, China
Right.
has multiple reactors constructed, and then I don't remember if the U.S. is starting to construct any reactors or whatnot. But the uranium has to fuel these reactors. Um, there seems to be a lot of focus. Like I've participated in some of the small modular reactor stocks and have benefited from that. Obviously, the utility companies like Constellation and Duke, like we saw, like, you know, the news headlines comes out, oh, Constellation and Microsoft or whoever, right? And the stock just goes up, right? But then when you look at a company like Denison Mines or NextGen or whoever, right, that actually brings the material that all of these reactors and utility companies need, you know, you look at the price performance and you're like, oh, well, there's like a disconnect here. What's your view on this supply deficit and you know, companies that are bringing the actual material to the market or to,
The,
yeah.
the supply deficit is real, and I think it's expanding. It's expanding partially for reasons that are bad for the uranium miners. What I thought was probably the best in production uranium mine in the world, Inkai, which Kazatomprom and Cameco shut down due to low prices, has been very slow to start up. And I had anticipated that that mine would produce 10 or 12 million more pounds a year than it is. That's good for the uranium market, and it's bad for Cameco, and it's bad for Inkai, and bad for Kazatomprom, pardon me. So the other near-term challenge for utilities, but benefit for producers, has been um, the threat of the cessation of Russian supplies to the West. As you point out, the Russians control 40 or 50% of the re-enrichment and fabrication business in the world. It's interesting that despite the proxy war between the US and Russia, that last year Russian imports of enriched uranium, U.S. imports of Russian enriched uranium doubled. uh, I'll leave that one aside. But the threat of access to that capacity has meant that reactors have relied more on new feed or inventory than they have enriched feed. And that has been a stimulus for demand too. What people don't look at, and I don't know how to quantify it, frankly, Daryl, is that the spot market is becoming much less liquid. Uh, on many days, the dollar volume of the Sprott Physical Uranium Trust, which is a derivative really of the spot market, trades more than the spot market. So I like to joke, particularly being a Sprott shareholder, that the Sprott market has become the spot market. And I suspect that you're going to see real tightness in the spot market because, among others, Sprott has now bought on behalf of investors something like 65 million pounds. And that supply went to supply heaven. There's no mechanism by which Sprott can resell that back into the market. And so when people had estimates of what the supply overhang was 5 years ago, estimates as high as 150 million pounds, well, the first thing that happened is we burned up 15 or 20 million pounds a year uh, because there was a shortage of primary production relative to consumption. Artificial shortage, to be sure. They were mines that were shut down. But the second thing that happened that you don't, I mean, it's easy to see, but you don't think about it in the numbers, is that 65 million pounds afloat, 65 million pounds of supply, literally went to supply heaven, to Sprott. Probably another 10 or 12 million pounds. I don't know what the number is. Went to a different vehicle in Europe called Yellowcake, and that supply is off the market. At some point in time, I suspect that you're going to have a price shock in the uranium business. But whether or not you have a price shock, it actually doesn't matter to me. If I had a term contract at 75 or $80, ratcheting up as these contracts are with some index, maybe the CPI rate of inflation, something like that. And I know that I can build a mine producing 5 million pounds a year and I sell 3.5 million pounds of it, guaranteed to Duke Power or Constellation or Southern Company for $80 a pound ratcheted. I'm a happy, happy, happy boy. I don't need a price spike in uranium. Uh, the newbies in the uranium business, the uranium posters on X, who have suddenly decided that they're going to abandon the uranium business, they don't care much about lowered cost of capital or enhanced free cash flow from contracts. They mostly want the sort of sex of the narrative, like uranium isn't merely going to go through the roof; it's going to go through the to the moon, and that's going to happen next Wednesday. Those people are around in every business, and you just sort of chuckle at them and ignore them and hope that they're not friends of yours, so that they don't lose their home or their cars.
Yeah, for sure. So looking at you do a lot of ratings of portfolios, and so I mentioned a couple of companies, NextGen and Denison. What is your ratings of those companies? I'm just interested. I haven't submitted my portfolio in a while. I'm kind of
You,
scared too, but let's do it live on
I have
that.
I have pretty generous rankings for uranium companies. I have Denison as a 5, despite the fact that what they're trying to do is really a science project. They're trying to do in situ recovery, not on surface in sandstone roll fronts, but really at depth. If this works, Denison is going to go crazy. They will have a game-changing technology in the Athabasca Basin. If it doesn't work, I'm going to get spanked in Denison, and I'm not at all sure whether it's going to work or whether it's not work. I'm not smart enough. I spent a lot of time trying to figure it out, and I've wasted all the time because I'm right back at square one. They got great assets. They got a great database. They've got a permitted mill and tailings, which is great to have. But the intermediate future is a science project. I can only hope it works. I have NextGen grudgingly as a 4. I say grudgingly. This is the best undeveloped uranium deposit on the planet. Period. Full stop. It's big. It's going to get bigger. It's rich. It's likely going to get richer. It is 250 miles away from anywhere. I mean, it is really, truly in the middle of nowhere. And it sits next to another deposit, formerly controlled by Fission, now Paladin, and they need to get built together. This other deposit, uh, well, not as nice as NextGen, is the second best undeveloped uranium deposit in the world. And the idea that you would build twin camps, twin gen sets, twin mills, this is really stupid. They need to get built together. But I'm getting away from the point. The bad news about NextGen is that the general and administrative expense is out of control, really, truly out of control. Yes, they've done a really good job de-risking the project. They've done a really good job in relations with the First Nations and Métis communities. They've done a great job in environmental and water permitting, flora, fauna. I mean, a really superb first-class job. They've done some other things too, like sponsoring Formula One racing. Um, they ought to be appearing on Daryl Thomas' show. How many uranium speculators are fans of Formula One? This is really, truly silly stuff. So I have it as a 4 because the general and administrative expense, the fact that they need to finance that general administrative expense, ultimately dilutes my position in the finest undeveloped uranium deposit in the world. It's very, very, very inelegant what they do. Every now and then they do one of these large preferred financings for some reason, and the management team always secures voting rights in these new financings. Um, I'm fond of the CEO, Lee Courier, in the sense that he's a brilliant guy and he's responsible for the team that discovered the best undeveloped uranium deposit on the planet. And behind the scenes, that team has done a wonderful job of advancing and de-risking the project. Have they paid themselves too well? Yes. Have they made serious mistakes with the allocation of general and administrative, particularly promotional expense? Yes. Do I own the stock? Yes. Will I buy more on dips? Yes.
So, just for a real quick rural classroom kind of lesson, when we're looking at administrative costs and the expense column of a balance sheet, are you looking at that relative to the revenue, or is there like a general kind of sense, a sense of like where administrative costs should be? I'm pretty sure it's probably company specific, depends on what.
It's absolutely company specific. What's the purpose of the expense? And is the method by which they're pursuing that purpose the most efficient way? In terms of distributing news about a uranium company and attracting investors, I think Formula One or stadium naming is uniquely bad. I mean, uniquely bad. Uh, and I don't want to spend the whole call beating up on NextGen. Understand that looking at general and administrative expense in a development stage company as a percentage of revenues is illusory because there's no revenues. You look at the general and administrative expense that's incurred, and you look at the function that it's allocated towards, and you try to decide whether that expense is the most efficient way to address that function. And I think it's safe to say in the course of some of NextGen's expense, the answer is no. Now, there's huge front end community relations expense, engineering expense, technical expense, permitting expense. These are big, big, big numbers. And I think the team's done a great job there. They spent a lot of money, but they probably had to spend a lot of money. And the money that they've spent is money that if somebody acquires them, the acquirer will not have to spend. In other words, if the impact benefits agreement with the host First Nations is already in place, and if the social work has been done so that the local First Nations are happy as opposed to merely tolerant about the mine, that's worth a lot. It really, truly is worth a lot if the environmental work is done well, and if it has been proven that the site works don't interfere with things like caribou migration or whatever it might be. That work takes years to do. And once you've done it, that work is of real, real, real value, as is permitting. So I'm not saying that all the G&A is wrong. I'm just saying that you have to look at components of G&A and say, is this expenditure really, truly in the interest of shareholders?
Yeah, definitely. So looking at well, with that, Formula One, I don't know who their target audience is. I don't watch Formula One. Um, yeah, and so yeah, more people watch like the Super Bowl or NFL or NBA, I think, compared to Formula One. So I don't know what they're if they're just trying to get their name out or what,
I
but
suspect the
uh
directors like Formula One.
yeah. I was just like, ooh, I'm not watching that. Like, yeah, it does not reach me as an audience. What about Cameco? So Cameco, obviously larger cap. Um,
A couple things
it
right with
seems like the
Cameco.
safe bet.
Couple things right with Cameco. They have a lot of latent production to bring back on now that the price is up. They have been very, very, very disciplined about only bringing production on when they've secured long-term contracts to sell it. That's what they said they were going to do 5 years ago, and lo and behold, they've done it. Two problems with Cameco. One is Inkai, uh, the mine that I thought would produce the most certain and lowest cost new supply has been stubbornly slow to start. Now there's public disputes between Cameco and Kazatomprom. Part of the dispute centers around a shortage of sulfuric acid. And the unwritten supposition is that Cameco is responding to US and Canadian sanctions against Russia and not using Russian sulfuric acid, while the Kazakhs have said, we don't have a dog in this fight. And if we can't use Russian acid, where we're located next to Russia, we can't get any acid. Uh, there seems to be a public dispute between partners, which is not a good thing. The second challenge you have to get through with Cameco is also a huge opportunity. They bought Westinghouse, or they bought half of Westinghouse. So they went from being merely a miner to a full cycle uranium company, building mines, building nuclear reactors, operating nuclear reactors. And so far, the Westinghouse acquisition has been a failure. They're losing a bunch of money. Uh, the headline idea ultimately selling watts as opposed to uranium is a very good idea. The question is, can they pull it off? Can a bunch of miners run an engineering business? Thus far, the answer is no. That's the risk and that's the reward.
Mhm. And where would you rank them on? Are they in the top in the five? Because your
I
ratings a
I
one is
I
like
I
perfect,
backed
right?
Cameco off from a 4 to a 5. My rankings, as you know, Daryl, are very harsh. I believe I've had 9 number 1 rankings in 35 years of doing rankings, so they're extremely rare. I have Cameco as a 5. I had it as a 4 until I saw the Westinghouse numbers in the last quarter, and that was scary.
Mhm. Got it, got it. So let's do this. Let's do this for the audience. If you're willing to do this. So you do a lot of rankings. What is a uranium company that is a let's say three and above?
Don't have any.
Three. Okay, okay,
Don't
no.
have any.
Hey,
I may move Paladin to a 3.
hang on, real quick. So Paladin. Okay,
Yep.
so you may move it to move Paladin to a three, which means
Yep.
that it's higher on your ranking.
It,
So
it, it's a
let's
it's a 4. My rankings are 1 is best, 10 is worse. It is a 4. I may move it to a 3.
yeah. So let's give the audience an opportunity to do some due diligence. And why do you think Rick may move this to a three, from a four to a three? Drop it in the comments below. Let's
Great.
have Rick back on to discuss his thoughts and why he's thinking about moving Paladin from a four to a three. What
I'm
you
on
think
it.
about that, Rick?
I'm on it.
All right, all right.
I'll shut up and let the audience guess.
All right, cool. So you all be sure to comment below. Why do you think Rick may move Paladin from a four to a three? And Rick, let's talk about the symposium that's coming up this year. I know we're getting early on with the marketing and such, but it's an amazing event.
Yeah, I mean, Daryl, you've been now, so I don't need to sell you anymore. You've seen it. You've had a good time there. You've learned a lot there. So let me talk to your audience a little bit. First of all, depending on who you ask, I'm too old to remember, but I've put these things on for almost 30 years. And every year we make a little bit better. And if you do something for 30 years and every year you make a little bit better, it gets to be pretty good. And I would suspect that this is the finest all round natural resource investment conference on the planet. You got 2 ways. You could either go in person to Boca Raton, Florida, which is frankly what I suggest. There's a lot of nonverbal communication. You learn a lot at the bar, in the buffet lines at breakfast. You learn a lot casually. But if that's inconvenient, you can attend the conference online from the comfort and convenience of your own home. 1,000 people did so last year. Either way, we're going to give you 48 hours of intense programming over 4 days. You're going to have to review the conference tapes, whether you attended live or whether you attended on live stream. So it's not going to be 48 hours for you. It's going to be 150 hours for you. Get that straight. And by the way, don't come if you're a tourist. If you aren't prepared to work hard, you're not going to get your money's worth. And there's no particular point in coming. If you're serious about natural resources, absolutely come. Why is it so good? Well, first of all, we have fantastic, big picture macro commentators, and not the kind that you see on CNBC or Fox for that matter. Jim Rickards, former counsel of long-term capital management, part of a team that almost brought down American finance. A guy talking about the structure of American finance from, in a biblical sense, the belly of the beast. Nomi Prinz, ex-Goldman Sachs partner, Daniela DiMartino Booth, worked at the Fed, talking about the Fed again from the belly of the beast. This year, I'm delighted to say we're going to welcome back David Stockman. Delighted because he was the director of the Office of the Management and Budget in the Reagan years. For those Trump supporters who actually believe that the Department of Government Efficiency is going to cut government expenditures, reading The Triumph of Politics, which details the derailment of the Reagan Revolution by politics, will be a sobering wake-up call. By the way, Stockman's not anti-Trump. He's just a realist about the way that politics intersects with freedom. So after we've painted a big picture view of the world, we have analysts who have been successful in natural resources for 30 or 40 years, people who have stood the test of time through good markets and bad, telling you how to apply these big picture concepts and make money in your portfolio. Unlike any other conference in the world, Daryl, and you know this to be true because you were there, every one of our exhibitors is vetted. The qualification to be an exhibitor at other people's conference is a pulse and a check that cashes in reverse order of importance. At my conference, every public company exhibitor has to be owned in the portfolios of the conference presenters. No guarantee, sadly, that because I own a stock, it goes up, but there is a guarantee that unlike any other conference on the planet, we have vetted every single exhibitor. The most popular feature of the conference is the Living Legends panel. The Living Legends are entrepreneurs who have built multi-billion-dollar companies from scratch. They tell you how they did it. They tell you the mistakes they made. They tell you how that experience can make you a better investor. And they tell you, better than I or anybody else possibly could, how you identify the $5 million company that's going to become, over time, a $5 billion company. This feature is so popular that I've expanded it this year. I'm having the Investing Legends panel too. People who have invested and made literally billions of dollars in the natural resource space, talking to you about their mistakes, talking to you about their techniques, talking to you about failures. So we'll have the company builders and we'll have the investors, legends in both cases. There's lots and lots and lots to learn from them. Finally, Daryl, unlike any other investment conference on the planet, mine has a gold-plated money-back guarantee. Whether you attend live or whether you attend via live stream, if you don't feel for any reason at all that you didn't get your money's worth, email me and I'll give you your money back. The financial risk is all mine. There are not many investment propositions that are literally guaranteed not to have financial risk. I'm delighted to say, in almost 30 years of offering money-back guarantees, I've had to refund less than 1/10 of 1% of the tuitions I've charged. But that's my guarantee to you that, in fact, attending this conference will be worth both your time and your money.
Yeah, you communicated a lot of value there. I mean, I'm looking forward to David Stockman. Yeah, I got his book, The Triumph of Politics at Home. I haven't cracked it open yet, but I'm looking forward to that. And yeah, I'm currently listening to the audiobook of recent book of his. It was Trump's War on Capitalism. So I'm looking, I'm really listening to that one now. Yeah, if you're too emotional, you can't think objectively, this may not be your favorite guy to listen to. So but he tells you how it is. He's a realist. And looking forward to the Investing Legends panel as well. So everyone, be sure to click the link in the description below. That leads you to the Rural Symposium where you can attend virtually or in person. I will be there. Rick can be there. Rick will be there. And you can connect with us in person and everything. So Rick, appreciate you for coming on, and thank you. Thank you for this valuable conversation.
Pleasure, Daryl. And for your listeners, any of you who care what I think about natural resources can personalize it. Go to my website, ruralinvestmentmedia.com, list your natural resource stocks, and I personally will rank them. No charge, no obligation. I'll rank them 1 to 10, 1 being best, 10 being worst. If I have individual comments on individual companies, which I think are worth repeating, I certainly will comment on those companies. Once again, Rural Investment Media, list your natural resource stocks. Please, no pot stocks. Huh?
No crypto.
That's
no
right.
Pot, no crypto.
That's right. That's right. You've been listening. Yep, absolutely, positively. Yep. No tech stocks either. Yeah.
Yep, that too. All right, cool. Appreciate you, Rick.
Thank
everyone,
you, sir.
Be sure to go to the description below. I'll link to Rick's website as well as the Rural Symposium. All right, talk soon.
How to your family for me, Daryl.
Will do.